just give us a little bit of a breakdown of what drove this positive result when we came to the PMI index.
Yes, thank you very much. As you said, the PMI rebounded quite strongly from the December levels. And one of the biggest drivers is the new sales orders. That picked up quite strongly as well, by about 9 index points. Now, bearing in mind that the new sales orders is by far the biggest contributor, has the biggest weight in the PMI calculation as well. The other significant contributors, business activity also rebounding relatively strongly as well. We saw expected business conditions also improving relatively strongly to a new index high, a recent index high of about 65 points. And then the measure that we typically look at for the typical forecasting tool is a leading indicator, which is a ratio of new sales orders to inventories. That also rose to above 1 ratio for the month of January. So overall, all of the bigger indices and components recovering quite strongly. And even the ones that have declined, those have had positive impacts in the overall PMI as well.
Okay, Abdul, when you talk about the recovery though, sustainability, what do you see going forward?
Bearing in mind that we had some weak manufacturing activity in December, so the clear gauge of to what extent we were just recovering from certain once-offs in the December base, and to what extent this the new level is sustainable, that we'll obviously only gauge in February with the new numbers coming out then. But I think we have seen some strong momentum in the automotive sector. We've seen, given the issues that they had in fourth quarter last year with some of the parts, especially from Thailand, given the flooding that has happened there. Also, we know that ArcelorMittal, the Newcastle plant, has restarted again, and that clearly has had a positive impact on sentiment, on new sales orders, etc. as well. So to an extent, there's a bit of once-off nature to the numbers in terms of restarts, restocking, etc. But we do believe that there's underlying fundamental strength to the manufacturing sector as well.
The purchasing managers, one of their concerns was input costs, and just tell us some of the specifics that they probably gave you in the survey.
Yes, what we have seen is that input costs have declined slightly in January, and that we think is mainly due to a slight strengthening of the rand over the period. But bearing in mind that commodity prices, dollar commodity prices, have recovered reasonably strongly, barring a few exceptions, maybe the platinum, the PGM metals, for example. But the rand overall is significantly weaker compared to, say, 12 months ago. And I think given that a lot of our commodities are imported in the manufacturing sector, that has had a big impact on that price level. So the price index still above 80 index points is indicative that manufacturers are still struggling with very high rand-denominated prices for their raw material inputs.
We saw China's PMI coming out a little bit stronger than what had been expected. What does that say to you is happening right now in such a strong economy? And you were saying it's really important to be looking at China right now with the Eurozone in such crisis, and that being a major trading partner. So China coming out with those quite positive numbers, what does that mean for South Africa?
Yeah, I think the Chinese number has surprised the market. I think the overall consensus was for flat to slightly down in terms of the Chinese PMI. If one looks at the big driver, again, their new sales order, which is also a big component of the Chinese PMI, that recovered quite strongly as well. So I think that's an indicator that Chinese underlying strength in the economy is probably significantly better than most people expected. I think everybody is talking about a soft versus hard landing. If you look at the GDP numbers that has come through, I think for the fourth quarter last year, at about 8.7%, still significantly better than a lot of people would have expected. And also, I think substantially better than the 7 to 8% range that people are talking about in terms of a soft landing. So given that underlying strength, and as you said, South Africa, given that we've now spread our base in terms of export markets, China is getting increasingly important to us from our raw material exports and even some of our manufactured goods exports as well. So that is an important indicator for us in terms of gauging our own activity in terms of future export markets as well.
Abdul, we already have some reports coming out about how the Eurozone is looking at with their PMI, and there has been a bit of an uptick. They're still under that 50-point level, but there has been slight uptick. Do you think that with everything that's been happening with the Eurozone right now, that slight uptick, it might not be significant, it might not be positive numbers like we got, but that it might actually mean that the crisis that everybody is going on about might not be as bad as is being touted to be going forward, that is?
I think we certainly hope so, and from the global economy point of view, we certainly think that is obviously the ideal and the best outcome. However, bearing in mind that a lot of the manufacturing base in Europe, similar to South Africa, has almost been exported to China. So China has taken over a lot of those industries that previously would have been done in those Eurozone regions. Again, given the lack of competitiveness, the high cost of cost of labor in some of those Eurozone countries, and bearing in mind that the historical legacies of some of those countries is not manufacturing based, I think the peripheral countries in Europe like Portugal, Italy, Greece as well, they are not strong manufacturing sectors per se. So the contribution that those manufacturing sectors make to the overall GDP for those countries is questionable, and I think has been declining over the last couple of years as well.
Going forward, I mean, we cannot ignore how big the Eurozone is when it comes to South Africa's trade balance. Your forecasts?
Yeah, I think it's Europe is still between 30 and 35% of our export market, so it is quite important. And any recovery in activity in terms of GDP, their manufacturing sector would be positive for our exports as well. We certainly hope that the trend continues in terms of the recent PMI numbers, as you've mentioned, recovering. And ideally, if they can recover to about 50 level, that would be positive from a South African point of view as well. Given that we have seen sort of strength coming out of the likes of Norway as well, and even the Spanish numbers also recovering, I think that bodes well for future Eurozone PMI numbers as well.